Well, still ahead, we get more on those big tech earnings, why the industry giants need to convince consumers that they're indispensable if they want to keep up that growth. We'll be discussing all of that with Applico CEO Alex Moazed.
As risk on U.S. futures trading at the moment, I mean, we already had Alphabet doing pretty well given that their ad revenue at Google beat estimates. We also had Texas Instruments really surging after hours, countering concern that a slowing economy was hurting demand for electronics. But it was really the turnaround that we saw in Microsoft that's catching everybody's attention right now. Of course, they fell initially because of that revenue and profit miss, but then their guidance is saying that they're going to see double-digit sales growth for 2023. That's really leading to that upside in after-hours trading at the moment. Let's bring in our next guest who's more bullish on Microsoft, Meta, and Amazon. With us now is Alex Moazed, founder and CEO at Applico. Alex, good to have you back. So let's start with Microsoft. I mean, how positive was the guidance that we saw this huge turnaround in trading?
Satya was very bullish. Talked about, what did he talk about? Not about consumer advertising. He talked about large enterprise contracts, right? Of the big five tech monopolies, Microsoft has the least dependency on consumer and advertising weakness, right? They're the strongest positioned in the enterprise, and they've been making a lot of innovative new business model investments, which you're starting to really see benefit them over the long term.
Yeah, let's talk a little bit about the consumer, because this chart on the Bloomberg showing how consumer confidence has really plunged, right? I mean, we got those numbers today, and that really did not sit well with the regular session. So who are the biggest beneficiaries of this new environment where you have to be careful about consumers not spending as much because you have prices surging, and at the same time, of course, borrowing costs continuing to rise?
So at the end of the day, any tech monopoly is going to be a flight for safety, right? Where investors want to put their money in the less risky places that can still grow. Any of these big five tech monopolies, they have that, right? And you're also seeing Alphabet up in after earnings, even though they missed, right? But Alphabet and Snapchat are two very different animals. Snapchat is much smaller, much more susceptible to recessionary woes, to a downtrend in consumer sentiment and advertising trends, right? But so all these tech monopolies generally will fare ahead of their smaller peer competitors and can reinvest in these downturn type of environments. That said, an Amazon, a Meta, I think are poised much better over the long term than, let's say, an Alphabet and an Apple on a relative basis.
Alex, I want to bring up this terminal that shows kind of the coming down to earth when it comes to the tech cohort compared to the broader markets. You can see the declines from that 2021 peak have erased most of the group's outperformance on a total return basis. You talk about the need for strong returns as a conviction trade, and I think that's the psychology of investing in tech, right? You want that growthy nature to kind of continue more over what the fundamentals might imply. Is that now looking pretty shaky if we're seeing a bit of a reset in terms of returns?
Yeah, I mean, tech asset price inflation was completely just insane. There was no way to justify where the multiples are at. And frankly, if you actually look at where the prices are at today, they're still up 30-50% from where we were pre-COVID, right? February, March 2020. So your larger tech monopolies are still up from where they were 2.5 years ago. That said, you look at the smaller tech competitors, they're just much more susceptible. They don't have the profits that they can point to, and their growth is getting hit. Your larger tech monopolies, they're cash cows, right? They're throwing off cash, they're throwing off profits. The growth is slowing. They have a much stronger base to build from and reinvest from. And so I think those things start to matter a lot more as we look at what's ahead for investors and for the tech investing environment.
How much do CEOs matter right now?
A lot. And that's honestly, that is why I don't like Google and Apple as much as I like the other three. I don't think that that Tim and Sundar have been as innovative and as progressive on growth and investing in new disruptive, new digital business models as the other CEOs. Look at Andy Jassy, right, and how they're leaning in on healthcare. Look at Google and Apple's inability to really make it happen in healthcare versus some of the other players in the field. That is honestly one of the biggest reasons why I'm more bullish on those three and less bullish on those two, Google and Apple.
Yeah, expand on Apple, because of course they also just announced a promotion in China as well, and that's the big one this week as well, right?
Yep, I think Apple's on Thursday, but what is it for Apple? It's all about the iPhone, right? What we saw in Microsoft's earnings just now is they said, hey, the PC market is weakening, right? So what that means is it's really all on the iPhone for Apple. Apple has not been able to figure out what's the next thing, right? What is that new up-and-coming business opportunity for Apple beyond the iPhone and the App Store? They haven't been able to do it. And where does the buck stop? It stops with the CEO, and that's Tim Cook.
Alex, great to have you with us. Alex Moazed, Applico CEO.